You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees. And it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/optionsbootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. Welcome to Education Wednesday. It is time once again to commence operations on our newest doubleheader on the network, OBC, followed almost immediately by the newest edition, the Futures Rundown. So wherever you're getting this fine program, make sure you're listening to the full network. It's just a click away. And then you can get the Futures Rundown, everything else we do here on the network, on the on-demand side as well. My name, of course, Mark Longo from the THEOptionsInsider.com, as well as from, of course, the aforementioned network. Remember, if you want to go above and beyond, the on-demand side just isn't enough for you. You want to get a couple of extra exclusive shows. The Pro is the way to go. TheOptionsInsider.com/pro. Get you oddities, get you pro Q&As. Had some fun ones last couple of weeks. As you might imagine, people have some questions this time of year and this time of every 4 years in the market in particular. So get over there on the Pro and check out what we've got cooking for you as we go out to see what you folks actually have cooking for us. Always like it when you folks take the time to rate and review the show. Just like this week's 5-star review comes from Emilio. It must be a paisan. He says, Emilio, grazie. Well, right back at you. Prego. Out there. But yes, thank you for everyone who takes the time to rate and review us out there. And speaking of paisans, I am joined by my boot camp and paisan, the black-hatted one himself, Mr. Dan Passarelli, beaming into us not from the options mecca known as Frankfurt, but from a little town you may have heard of called Las Vegas, I believe it's called. Is that how you pronounce it, Mr. P?
Yeah. Hey, buongiorno, Mark. How are you today?
I'm doing well. It sounds like we got paisans in the audience, a bunch of paisans on the show. I'm feeling good, sir.
All right.
It's like Italian-American Heritage Day right on the show. But but you know what it actually is, Dan? It's time for another holiday. Are you ready to, dare I say it, sir, get spooky? Are you down for a little bit of Halloween spooktacular, sir?
I'm always down for that, man. Let's do it.
All right, then. Let's do it. Oh, there we go. How's that, Dan? You feeling a little bit of a spookage in your blood? Is it a little bit too scary for you? I can turn it down for you if you like.
I thought you were going to have Vincent Price do the
the
intro
thriller. I'm trying to do non-copyright. We got enough copyright people coming in. We don't need the tubes saying we flagged that show. So unfortunately, Vincent Price copyrighted, but the epic Halloween spooktacular known as Toccata and Fugue in D minor by Bach is not, sir.
Wow.
And also, pretty darn bone-chilling. I mean, I could do the Halloween theme as well, but that's also copyrighted. This one kind of gives you a little bit of the spookage. You know, I could see you, Dan, in a lone castle, just pounding away on the keys. You know, what do you think?
As long as I'm playing public domain songs, yes.
Yes, public domain spooktacular. All right, just kind of setting the mood. I thought our usual mail call transition didn't suffice for the moment, sir, because we got to get a little spooky. We got to get a little scary. Welcome, of course. It is the day before Halloween as we are recording this, listeners. But you might be listening to it many months, years down the road. So hopefully wherever you are, we're giving you a little bit of taste of the old spookage out there as well. Let's start really quickly by looking back, Dan. Do you remember to the halcyon days of exactly a year ago when you and I were having all sorts of Halloween fun, and we had a Halloween spooktacular poll for the scariest sounding option strategy? Do you recall that, sir?
Oh, yeah, I do vaguely, yes.
Do you remember what won our scariest sounding option strategy last year, as chosen by the people?
Was it? Man, I mean, I don't remember, but I'm just trying to, guess again.
Tell you what, I'll give you the three choices we gave them. You can choose amongst them. Iron Condor, Iron Butterfly, or Strangle.
Oh, it's got to be Strangle.
Yes, Strangle ran away with it. 59.1%, 27.3% for Iron Condor, 9.1% for Iron Butterfly, and 4.5% for other. And we had some silly others last year. Then, Dan, as you probably don't recall, because again, all the day drinking I mentioned earlier, you also did your own top 5 most terrifying options trades of all time. Or maybe you can also say strategies of all time. Do you recall that list, sir?
I have a very, very bad short-term memory, Mark, and long-term memory for that matter.
All that brain trauma coming back to haunt you, sir. I'll give you number 5 on your list last year. It was any trade you don't understand. That was Dan's. That sounds like a Dan choice to me.
Yes,
that sounds like a Dan
does.
list. And number 4, you said the quote easy one. So any trade that I guess people think are too easy. What did you mean by that, sir?
Just when anything in life looks too good to be true, it probably is. And you always hear some bozo on YouTube or whatever being like, "Oh, it's the easiest thing in the world," and it's seldom is. Trading does take a little bit of work.
That it does. Then your number 3 was naked short calls. I think we can all get behind that one. That's an intimidating, I think, strategy, especially if you're doing it in, let's say, a meme stock, Dan, GameStop, right when Roaring Kitty is doing something crazy, or perhaps you're doing it in VIX when things are popping off in the market. Those can be times when maybe you're going to have to grab your britches if you're going to sell those naked short calls, sir. It can work out, but you're probably going to pop some tums along the way. What do you say?
Yeah, man. I have done all of those things in the past. Naked short calls in meme stocks, in VIX, and popped a lot of tums. Moved on to Nexium since then. Just one pill a day.
Yeah, they can work out in some of those situations, but you're going to wear it for a while, and you're certainly going to feel it for a while at the end of the day. All right, and then number 2 on your list, sir, was ratio spreads. I'm assuming you meant by that net short unit ratio spreads, so buying 1, selling 2, selling 3, that sort of thing.
Yeah, those are the ones, and if I'm not mistaken, I think you're a fan of those selectively anyway. And, hey, I always say every option strategy has its place, but those little suckers can sneak up on you every now and then. They seem really benign until they're not.
Yeah, it looks great. You buy an option for $1, you sell 4 options against it for 30 cents. Hey, you collected a 20-cent credit. I'm a genius. And then it explodes, 30% to the upside, and you're done. So yes, they can be spooky as well. Number one. Now this is interesting, especially in light of what you've been talking about lately on the show, Dan. Number one for you was straddles last year. Explain yourself, sir, because you've been talking up straddles for the last month.
Yeah, well, there's like, when it comes to horror movies, there's like the slasher ones where it's just like the guy with the mask jumps out from the shadows and slashes with a knife, like those are the quick ones, the slasher ones. But then there's like the slow burn horror movies, the psychologically disturbing ones, and those are kind of the straddles. They're just they're really, really tough. I've actually been trading a lot more of them this past year. They've just been the market's been a little more conducive towards them. But man, you read a textbook on different option strategies, and they sure make straddle sound easy. But we just always have to remind ourselves we're likely to have more losers than winners with straddles, and that's okay. That doesn't make it a bad strategy, but it does mean you have to psychologically prepare yourself for that.
Yeah, it's going to be a challenging bit of business out there, listeners. So, listeners, that was what you thought was the scariest sounding strategies, and what Dan thought were the scariest and most terrifying options trades of all time. We thought we'd turn the tables back to you folks again this year for a little bit. What fun is a spooktacular, Dan, if the folks aren't getting involved, right? So let's get out there to the folks again. As always, you folks can play along. We actually have 2 spooktacular polls up there right now, and a question of the week. So it's a hot week out there. One for this show, one for, of course, the upcoming futures rundown, and then our actual question of the week, which is more poised around vol in the election. But Dan, we thought this year, in the spirit of the season, we'd go for which option strategy. Last year we asked you which one sounds the scariest. This year, Dan, we're going for which one actually is the scariest for you. Which one are you most intimidated to put on? You just don't like when you put it on. Maybe you're really sweating, or you just avoid it because it's too intimidating. We had 3 choices, Dan. I mean, there's an infinite number. This is the case where I really wish Twitter could give you a 47 choice poll. So we narrowed it down to 3, and the infamous other, Dan. We gave them naked short straddles. I think you're going to see a theme with this one, listeners. Naked is going to be a recurring theme. Then we have naked short calls. So again, that kind of harkens back to actually Dan's list from last year as well. He had naked short calls as well. And then naked short puts. Those are the 3 kind of straightforward strategies. And then we put the infamous other for what really scares you, what strategy scares you. And we have some interesting choices already, Dan. It just went live right before showtime, Mr. P. But naked short straddles, naked short calls, naked short puts. Which of those do you think is the scariest? B, which way do you think our audience is going? Or C, maybe you have an other you want to share with us.
Oh, I mean, for me, I would say naked short straddles. And I'll tell you what, since leaving the trading floor, I don't recall trading one of those ever as a retail trader. I have had a student trader or two who would trade naked short straddles. And fortunately, they happened to be some of the smart ones. So they managed their risk and they knew what they were getting into. But I don't know, man, for me, I just don't like the fact that you have basically unlimited loss to either side. It's not my bag, man.
Yeah, infinite risk in either direction is not exactly, you're right, not my bag either, to borrow Dan's turn of phrase out there, which is one of the reasons why we included it at the top of the list. I'm with you, Dan. I don't think I've ever personally traded a naked short straddle, not that I can think of. If I have done it, it's always been as part of something else, right? A short, iron fly, something like that. I'm always covering the wings. I can't think of any scenario where I'm just straight blasting away at the money straddle. It just doesn't happen. So probably one of the reasons why it makes it on our list. Do you think our audience is choosing that too, Dan?
I would say, yeah, I would definitely say yes, because if they've been listening to our show, I mean, we're both pretty adamant about that. So, yes, I don't know. I don't have access to the poll data, I don't think.
That's why I don't give it to you. I want you to guess. I want you to put your thinking cap on. Even though you can cheat, head on over to our Twitter and see all of it. But right now, Dan, in the lead. In the early voting, we have naked short puts taking it with 35%, followed by 30% for naked short calls. I could see that. Straddles actually coming in third, 25% naked short straddles. So, wow, no fear out there for naked short straddles right now, Dan. They're much more intimidated by short puts, which to me I know naked short puts get a bad rap. That's why I put them in this poll. Everyone, they sound scary. Everyone says don't do them. But, at the end of the day, the risk is finite, at least. At the end of the day, that always is less intimidating to me than the naked short straddle, whose risk is infinite, Yeah.
Yeah. I mean, I would say if I had to rank a number 2, I would probably go with naked short puts only because, violent moves to the upside are not as violent moves to the downside. So I think there's a little more risk to naked short puts than there's to naked short calls, but both are risky for sure.
So yeah, interesting. Get over there. Oh, just ticked, Dan. Now we're at 22.7% for the short straddle, 31.8% for short calls, and 36.4% for short puts. So short puts increasing, and then 9.1% for other. Dan, we got some fun others. First, we have one of our pro members, Age Delaquaria, says time spreads scare him. Too many moving pieces. I know you have a whole time spread series. What do you think of that, sir?
Yeah, I think time spreads are one of those where somebody sees a YouTube video or reads a little ebook or something and it's like, oh, yeah, I got it. As long as it doesn't go too high or too low, I win. But yeah, Age Delaquarius is right on. There's a lot more going on than on the surface. A lot more going on than what a lot of, people who are charged with educating you, a lot more than they let on to, for sure.
And then there's always the wiseacres, Dan. Vernon Griffin wrote in to say he's scared of naked short people. So there you go. We all have our little picadillos that I suppose terrify us. And Dan, when I'm not terrified of naked short people, it's the Passarelli question of the week.
And now, it's the moment you've been waiting for. It's time for the Market Taker question of the week.
All right, everybody, welcome to the Market Taker question of the week. This is where Mr. P holds court with his burning MTM question. What you got for us this week, sir?
Well, a lot of people ask me, is there like a minimum stock price that you won't trade options on that stock? I don't know if I'm asking that or if I'm stating that the right way, but that's basically the gist of it. Regardless of how I'm stating it, the answer is kind of yes, but not entirely yes. There are some trades like our earnings trades, our total earnings domination trades. If the stock is not above $20, I'm not touching it. But generally speaking, with a lot of different option strategies, that statement rings true as well. But every now and then I will employ some trades on a stock that is under 20. I guess one pretty good example is the short squeeze trades, because the best short squeeze trades tend to be stocks, in the single digits, even below 10. And then you kind of realize they're a bit of a calculated lottery ticket, not really a lottery ticket that implies a negative edge, where, you might pay 15 cents for the option and commissions end up making a bigger percentage of your trade that way. But, you might pay 15 cents for an option and sell it later at 40 cents and just scale. but you might lose 50, you might lose a nickel on 3 or 4 or 5 in a row too. So generally speaking, I stay away from trading options on stocks under 20, except for in certain scenarios.
Whenever I mentioned that one to your buddy Mr. Overby there, his answer is always wherever Ford is trading. That's how low he goes, which given Ford's latest screwball earnings, I think they're down to $10.50. So his cutoff is around $10.50. So wherever Ford is, that's as low as Brian Overby will go. And that always brings a smile to my face. In the options market. But Dan, we had so much fun with our silly fun scary poll, which by the way, as we're talking, the naked short straddle is plummeting, sir. It's down to about 20% now. So the naked short puts up to 37.5%. So I don't know. Folks are scared of those puts, sir.
I'm glad I bought puts on the naked short straddles.
Yes, exactly. We have a whole behind the scenes hedging and wagering system around our questions of the week. It's pretty hot. Speaking of our actual question of the week, outside of our fun Spooktacular queries, listeners, we said quite simply, we have one more full trading week before the big day. Anything can still happen. Surprises can still unfold, which raises the question, Dan, where will VIX close on Friday? Gave you 4 choices. Good wide ranges you can really sink your teeth into. Right around here where it was floating around when we posted this, 18 to 21. Lower, so dropping below 18. Higher, 21 to 24, or still higher, north of 24. And Dan, as we're recording this, we're flirting with a 20 again, 1985 out there in VIX cash. So we're still kind of vacillating, almost dead smack in the middle of that range from Monday. What is your spidey sense telling you for where we'll close on Friday, sir? Not even next week, heading into the weekend. And then B, where do you think our audience is going?
Wow, this Friday, that's a good one, man. I would say probably around the top of the here range, 18 to 21. But I don't know if we bust through 21. Well, you know what? I'm going to change that. I think we'll probably be towards the lower end of the higher range, 21 to 24. I think there's a reasonably good chance we make it into the 21 handle.
Yeah, I don't think that's unreasonable at all. Our audience, Dan, 36.2% right now saying going to be in this range, 18 to 21. 25.5% saying north of 24, so they're feeling some froth. 21.3% say higher, 21 to 24, and 17% say going to crush it below 18. Get over there at options and make your voice heard, just like you folks did last week on our questions of the week. We said, hey, we had another election-themed question. You said, may have heard an election is looming. If you had to buy one straddle to hold through the election, which one do you choose? Gave you 3 choices and the infamous other. The DJT Nove 31 straddle expiring next week on the 8th for, at the time, $17.80. That seemed like a ridiculously overpriced straddle. Then the stock roared up to high. How high did it get? We got up to almost $50, $48 since then. So it almost moved the width of that straddle already. So yeah, it's been quite the run. The actual winner was 37% of you chose the SPY 582 straddle expiring next week for $17. Now on the 8th, 29.6% chose the DJT straddle. 22.2% went for the VIX Nove 19 straddle expiring the week after on the 13th. Remember, VIX goes out on a Wednesday, listener, so we gave you an extra week. That was $4.16. A 22.2% going for that, 11.1% going for other. Damn, any surprises for you on those results, sir?
Geez, no real surprises. It's a tough question, though. I don't pretend to understand DJT stock, so I just feel like I can't really weigh in on that one.
I don't think anyone does. That's the whole point of it, right? It moves on the whims of things that have nothing to do with the market.
Right. And I don't remember what the heck I said last week, but chances are I think you'd be better off selling these straddles, but I wouldn't. A, it's the scariest one, and B, there's just more potential for black swans this time around than any election in my lifetime.
Any election indeed, sir. We're at a crazy one. DJT hanging out at a mere $43 right now, listeners. So yeah, just a crazy one out here. We also had some other fun ones, including Uncle Mike. He mentioned we had an October surprise one. Do you think we see an October surprise? 73.7% said yes. Well, the clock is ticking. We got a day left, listeners. No surprise yet, unless I missed the surprise. It was so unsurprising that I missed it. But so far, at least, I don't think we've had anything. Let's go out to BBT on the listener line, Dan. BBT says, is there... Oh, this is actually very timely, what we're just talking about. He says, is there an option strat that you guys simply don't like or don't find yourself using ever? Well, Dan, we were just talking about short straddles. How neither of us have sold a naked short straddle, I don't know, ever. So that certainly qualifies. I'm hard-pressed to think of another strategy where I'm like, I've never done that, at least in recent memory. Naked short straddle certainly leaps to mind, so that might have to be my answer, Dan. What do you think?
Yeah, I mean, I think that's a pretty good answer. Yes. That would definitely be at least one of my answers. Naked short straddles, for sure.
Yeah, I mean, it might be some funky thing like, ratio iron condor swap or something like that, but that's not really that. That's a more esoteric thing. He's talking about more mainstream strategies. Yeah, when it comes to just blasting away on straddles, not exactly a use case I really have or have ever had. So there you go, listeners. That was an easy one. We can fit right in, Dan. They should all be so easy. All right, let's go out to Thomas Canton. Oh, he says hello from the UK. So there you go, Dan. Next time you go abroad, got to stop in the UK. Maybe you could see our buddy Thomas.
Oh, yeah.
It can't all be Oktoberfest drinking binges with our listeners here. You got to spread the love a little bit. They have some good beer in the UK as well. He says, hello from the UK. I would like to ask a question about time spreads, please. I love our overseas listeners. So polite, Dan. They say please. Am I correct in assuming that if the second month's volatility is cheap and the front month's volatility is high, then that is a good setup for a time spread? Because you are looking for the second month's volatility to drop and the front month's to rise, thus shrinking the spread. Is that correct? Is that the correct setup, please? Well, another way you can see that they're not from around these parts, they use thus in their sentence. Not something we see too often over here. Well, great question. But Mr. Dan, you are out there running, your time spread series. You spend a lot of time talking about the right setups for time spreads. What do you have to say for our buddy Thomas from the UK? He wants to know, is this the right setup for a straightforward time spread, sir? Buy the second month at the money, sell the front month. I'm assuming that's what he means.
Yeah, I mean, a couple of things. And I just kind of wanted to clarify that, too. If the front months or if the front expirations volatility is high and the back is low, then that's a good setup for buying a time spread. Your second to last sentence here, because you're looking for the second month's volatility to drop and the front to rise. After you put the trade on, you want the opposite to happen. Before you put the trade on, you want that front volatility to have risen to be higher and the back to be lower. But, to the point that Age of Delaquarius brought up earlier, they're nuanced. I do time spreads a lot with earnings trades. And with earnings trades, I mean, you always see the front expiration higher than the back expiration, but sometimes it's just not high enough. So you kind of have to think that through. With a regular income generating time spread, you want to look at things like not just the implied volatility differential, but the theta differential. You want to see where the projected break evens are. There's a few other things that you want to take into account, but I do like the direction you're going and the way you're thinking about these things, Thomas, because that's a very important criterion when it comes to trading time spreads.
Yeah, that's a good point. He does kind of undo it with that second to last sentence. he was all right up until then. You're right. Once you buy it, you don't want that month you're buying to drop. You want the opposite. Yeah. So everything up to that second to last sentence, Thomas, you were right on the money. So yeah, I think in general, the way you're looking at it is correct. You want that vol you're buying to be cheap You want the vol you're selling to be overpriced, and hopefully vol you buy goes up, and hopefully the vol you sell goes down. It's pretty straightforward there. All right, let's go out to this one. This handle 30S. I guess he means 30s car. He has a 30s car or 30S car, whatever that could be. I'm going to go with 30s car. It just rolls off the tongue better. 30s car wants to know, do you guys ever take this show on the road? Would enjoy watching a live show? We'll figure a car guy would ask a road question. But Dan, what we have done on the network, a lot of live shows over the years. Our Option Block show, we famously took over Elephant and Castle back in the day. I've done vol views on the stage at FIA. We've done a lot of live shows. Done vol views at the SIBO. I've done a bunch of other things live. This show, we haven't really, with the exception of when you have your mastermind session. Then we do it live, but for a very select audience, Dan. It's just for your students there. So I guess the correct answer is yes, we have done live shows of this program, just not for the masses, Dan. What do you have to say?
Yeah. I was wondering if Elephant and Castle is like at the end of Route 66. Doesn't Route 66 go through downtown Chicago at a couple of points? Maybe we should find a bar to broadcast from.
Lou Malnati's is on it, or one of those ones. Or Lou Mitchell's, that diner, is right on the beginning of Route 66, I believe.
Oh yeah. That's right. So yeah, it's fun doing stuff in person, but I don't know. I'm in if you do one.
Yeah, ever since, post-pandemic, it kind of went mostly virtual, and this just seems like it's so easy for everybody, But there is something to be said for, you're right, getting the gang together and having a fun live show. So I don't know, 30s car, where are you? Where are you beaming in from, 30s car? Maybe we can bring a road show down to you. That'd be kind of fun. We just take it on the road, Dan. What do you say? We just go around. I guess technically you and I did meet on a panel in Las Vegas, so we can count that as like an early pre-show. And so we did the show in Las Vegas. And you're in Las Vegas now, so there is a bit of a Vegas crossover there, I suppose. But yeah, outside of that, we haven't done too many live. I don't know, maybe if other listeners are on board for that, you want a live OBC coming to a town. How about this, Dan? You're in Vegas, the Sphere. What do you say? We got to do it, right?
That would be great. Just send the bill to Options Boot Camp.
Yes, send the bill to that unknown entity known as Options Boot Camp. On the at least the corporate side, there is no corporate entity called Options Boot Camp. So send all the bills to them. I hear that what's it like, 12 million just to rent the building out for whatever it is. So yeah, a small entry fee, Dan. So the tickets would have to be probably somewhere in the 50,000 a piece range. But I think we could swing that for our audience. We got some high rollers in our audience. What do you think?
Yeah, and I think we're worth it, don't you?
Well, that's beyond question. Of course we are worth it. It's just a question of, our folks. They have to get to Vegas. There's a lot of logistics to it. But, the 50 grand, that's the easy part for our listeners out there, Dan. So let us know, listeners, are you down for a little bit of live OBC coming to perhaps a Sphere near you? All right, Dan. Glad you survived our Spooktacular. Hopefully it wasn't too spooky for you. We tried to make it manageable. We know your spookage threshold is pretty low.
Yeah, I mean, I made it. I had to pop an extra Xanax today, but what are you gonna do?
No blood-curdling screams, no sounds of chainsaws. None of the fun stuff that really gets the old heart pumping out there. Let's check in really quickly on our Spooktacular poll one more time. Yes, straddles continue to fall, sir. They're now 20% naked short straddles. Naked short puts running away with it, 36%, 32% right now for naked short calls, and 12% for other. The naked short puts got even higher. They got to like 38% while we were talking or something. So yeah, intriguing, wow. Sir. Intriguing elements. By the way, let's give a little bit of a hint, Dan. I will be doing the futures rundown in a few minutes, and we have a Spooktacular poll up there as well. What elements of futures trading are the most intimidating to you? They gave you 4 choices, well, 3 really, and the infamous other. Confusing margin, accidental delivery, I like that one. Or weird and wild products, or something else that spooks you. Dan, if there's an aspect of futures trading that spooks you, what is it? And what do you think our audience is choosing?
Man, I remember that one time when I had 5,000 bushels of corn dropped into my driveway.
It's the worst.
Oh,
in the middle of the night, they just drop it on your lawn. They don't even tell you. They don't even like ring the bell. You just wake up and there's just corn for days. It's the worst. I agree.
Yeah, cleaning up the bird poop afterwards was even worse.
So yes, don't take delivery on any ag product. Now the livestock, that's the worst. When they drop a bunch of live cattle on your lawn at 2 a.m., you know, that's definitely the worst. And the pigs, the lean hot, don't even get me started on the pigs. So yeah, the accidental delivery, certainly not. Our audience right now is going for confusing margin. Easy for me to say. Confusing margin, Dan, with 50%. Oh. Which I can understand. There's initial margin, there's maintenance margin, there's overnight margin, and it varies all the time by product. There's a lot of moving parts there. There's intraday. Yeah, there's a lot of different types of margins. So I can see why that would be intimidating, folks. If you want to hear more about that kind of fun, listeners, tune into the Futures Rundown in a little bit. Dan, I believe we'll have a guest on there that you will be familiar with, sir. It is your futures guy extraordinaire, John. Is it Seguin? Am I pronouncing that correctly?
Seguin.
Seguin. Okay,
yeah.
There you go. So there you go. Double dose of MTM on the network today, sir.
Very cool.
In the meantime, sir, if folks want a double dose of MTM in their lives, where should they go? What should they do?
Just head on over to markettaker.com, 2 T's in a row, and hit us up there. I'd love to help out any way we can. We love our listeners.
There you go. Don't forget the second T for Theta. And while you're surfing for stuff, head on over to public.com/optionsbootcamp. That's the easiest way to thank them for supporting this show that's been coming to you for well over a decade now, since its primordial ooze days out in Vegas. And that's all you have to do. Just go to that URL, kick the tires and light the fires. Maybe if you like something, tell them. If you want to see them add something, tell them that. Try out that rebate, public.com/optionsbootcamp to learn more. That's going to do it for us on the old OBC today. Back in a little bit with a little bit of the old futures rundown. Then back again tomorrow, of course, for the option block. And This Week in Futures Options Friday, vol views, options oddities coming for the pro folks, returning to its same bat time, same bat channel. You want to get access to that, of course, theoptionsinsider.com/pro. Then we kick it off on Monday until next Tuesday. We have the big election night spectacular. Dan, are you on for that? Are you going to join us for the see if you can win back your money from Uncle Mike? What do you think?
Yeah. Well, seeing as I didn't get my money from Uncle Mike last time, so I am going to join, man. Yeah, that's going to be great.
All right. Dan will join the live election crew. Should be a fun spectacular. We'll walk you through all the fun, all the madness that's going on, and maybe talk you off the ledge a bit if your candidate of choice is not doing well. So should be a fun night. There's always been surprises on these shows, so maybe we'll have some fun giveaways, all sorts of fun. So look forward to that. It's going to be open and available to all, so everybody can listen. Don't worry. So we'll see you back there next Tuesday, and then if Dan is not too hungover, we'll see you next Wednesday, another episode of Options Bootcamp. Stay safe out there.
If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees. And it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/optionsbootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.